Welcome to Loup TV Special Edition Peloton Preliminary Results. I'm Gene along with Andrew and Doug. I'll do the quick setup here. It has been a wild ride for those of you who have been following PTON, and today was no exception. Media reports about the company cutting production of bikes sent the stock down 25% in after hours market. They disclosed that the sub ads for the December quarter were in line with the street, a slight miss to their original guidance, and that churn had improved slightly quarter on quarter. Important metric, both of those. But also importantly, they talked about taking significant actions to improve profitability, which get us to Déjà vu. This feels a little bit like Netflix in the sense that they slightly missed company guidance. They made analyst expectations, and they had negative commentary about the March quarter. In Netflix's case, in the case of Peloton, we still haven't seen the guidance. I presume it will be for a slowdown here, and wanted to bring it over to Doug, kind of putting it together. What was your reaction to the report? And I guess, does it even matter what they put out tonight, given the fact we don't have the important guidance metric?
Yeah, I don't think it does matter that much. I mean, the biggest takeaway for me is, kind of throw away the numbers at this point. They are what they are. They didn't deny the CNBC report that they were going to be essentially pausing production of some of their products. And to me, if that were fake news, to use a term that is very popular right now, I think they would have said something in the release to the effect of, there are reports in the media that we want to clarify, or however you want to word it. We've seen companies do that in the past. They didn't do it. So to me, that is kind of confirmatory that there is going to be a pause in production.
Yeah, and the commentary about cost reduction actions, probably that kind of plays into something's not quite right on the demand side. Makes sense. Right. So your vote would be it's all about the guidance. We still haven't seen the guidance.
That's right. And the other thing I would add too is, these aftermarket moves to me are not always indicative of the true reality of what's probably going to happen to the stock. I think the true reality, to your point, is ultimately what's going to happen, not just to Q1, the March quarter, but even going forward. The street, I think, again, has to sort of re-rate and rethink what the demand is going forward, even more than in the last quarter report, where that was obviously the initial disappointment. So I think it's still going to be a choppy ride. I don't know where it lands, but I think it's probably still going to be a little rough from here.
Andrew, your thoughts?
Well, generally, I agree with Doug. This earnings release to me is not important for long-term investors. The numbers, for starters, weren't great. The fact that they issued a release confirms the reports that CNBC had this morning about them halting production, in my mind, or they wouldn't have published an early earnings release today. And the bigger picture to me is this swing from a hyper growth company, as Foley referred to the company just in June of last year, to a much more cost conscious, conservative mindset that you're hearing in the news today, in last quarter's earnings, and in this release here today. It's a complete shift from a hyper growth company to something else.
I just want to kind of frame in how the market works. And in this case, yes, they missed numbers. They did have effectively the same number of sub ads as they did a year ago against a very difficult comp. They improved churn. And I think collectively we would agree to different levels is what matters most is that trajectory that they're going to have around guidance. And so normally, if it weren't for the commentary from the CNBC report related to them halting production, if they were just going to put these numbers up as is and say they're cutting costs, I think the market reaction, my view of it, would be more constructive. I think that from my perspective, I want to see what these numbers look like. Maybe let's fast forward beyond 1 year. People are going to go, they will adjust their numbers appropriately. Maybe the company says that we're going to grow at 15% in 2022 versus previously we thought 20%, whatever the case may be. Like where should we anchor, back to you, Doug? Like where's the kind of the long-term trajectory here? Great churn.
It's hard to say.
It's a very loyal base. I mean, that's unprecedented retention numbers.
Yeah, the churn numbers are strong. I mean, to me, though, anchoring it back into what is a long-term trajectory, I just think we have so much choppy and volatile data about that to me, this is just a stock you don't touch. You walk the other way. I don't think you short it. I don't think you go long. I think you just ignore it. And it's something that we talk a lot about as investors, versus our old world as analysts. As analysts, you need to have opinions on stocks. That's what you're paid to do. As investors, we just need to go and find companies that we really love. And the great thing about being an investor is you can just decide not to swing. And this is one where I wouldn't swing in any direction. I just think there's too much uncertainty. And for me personally, I mean, I am a huge fitness advocate. I don't own a Peloton, but I have an Epic home gym that I've spent a lot of money on and I love. So I believe in home fitness. The problem that I've always had with Peloton is it always felt like it was kind of in the fad bucket. And we see a lot of fads come and go in the fitness space. That's really the life cycle of fitness, is we kind of go from fad to fad to fad. People talk about, the latest workout, it's cool, it's hip. And then we kind of move on to the next thing. I think that's always been the bear case for Peloton. And I think the numbers, despite the churn, I understand there are loyal customers. I think the numbers to me are saying that the sort of cult around the Peloton style workout is impaired right now.
Andrew?
Well, full disclaimer, Gene and I should acknowledge that we are avid Peloton users. And so there's good, healthy debate on the call around the value of the product and their cult-like status. I think the key question around Peloton, as you try to decipher what the company's worth, is how many subscribers can they amass over the next 5 to 10 years. And there was a time where I thought that number was closer to 20 million globally over the next 10 years. And now I'm much more convinced, after they went after that growth, lowered the price of the bike and invested in growth, and that growth just wasn't there. The demand wasn't there. I'm more convinced that their subscriber base looks more like 3, 4, 5 million globally. It's just a smaller end market than I initially thought. And so what I see from them over the last 3 months underscores that smaller market, that they've readjusted their cost structure and their business and their strategy to go after a smaller market and to embrace a smaller, more loyal, consistent base to, Gene, like what you said, their subscribers that are addicted to the product. It's just a smaller group then.
Cut costs, raise pricing, milk Gene Munster for everything he's worth. I can't imagine turning off my Peloton subscription. Right. Hard for me to imagine that. If you'd have probably talked to me 20 years ago, I'm 50, I would have said I can't imagine not getting down and doing a bench press. I haven't done a bench press. I think I could probably do 135 pounds right now. I haven't done one for 15 years. And so I think there is something to be said about this idea that fads come and go. And I think what it ultimately comes down for me is you have a really loyal base here. They are doing hardware, software, services. I think they have an incredible product like no other home fitness product. My question would be is, can you get to that next fitness phenomenon? Can you, maybe by definition, because you're the incumbent, you can't be the incoming perhaps. But that to me is what it comes down to. You've got me, Peloton. I'm going to be paying you. And I think that you got a great business to fall back on here. But you better be thinking about that next fitness curve, whatever that is, and making sure that you're ready to have a product that costs less than $1,500 to get there. On behalf of Andrew, Doug, and Gene, bye for now.